traders at UBA say the scarcity of bonds is keeping the market mute, while the Treasury bills market maintains a bullish outlook with buying interests skewed to the newly issued 364-day paper. Kenneth Onuoha, team member assets and liabilities at UBA, joins me now for a wrap of trading for this week. Kenneth, thank you for joining us today.
Thank you for having me, Esther.
Well, talk to us about this scarcity of bonds, of notes at the bonds market. What's that about?
Oh, okay. So let's start off by saying that what we actually experienced in the week is a scarcity on the short end of the bond market. So there has been minimal demand for the 53s, but then again, it has only traded. Trades have only been executed at what, maybe sub 18% levels, but at the shorter end, the 2038, the other shorter ends of the bond market, of the bonds, we have found that we have had scarcities on that front, and that has prompted the interest to actually be on the low on that angle.
Right. Let's quickly move to the treasuries markets. I'm looking at what the DMO sold at that auction, 561.1 billion versus 211 that was on offer. Obviously, very much oversubscribed there. But what can you tell us about the rates? The 91-day, 182-day, and 364. I believe the 364-day rate was unchanged at 16.7, but that 100 basis points movement for both the 91-day and 182-day, was that what the market was expecting in terms of movement upwards?
Oh yes, we expected it to continue to trend upwards, but then it was quite interesting to see, like you rightly pointed out, that the 91 days and the 182 days paper had showed 100% increases on both sides, because it was at the last NTB auction on the 8th, we noticed that the stop rates printed at about 7% and 11%, but this one printed at 8% and 12% respectively. So clearly, yes, it was the sentiment of the market that it was going to go up, yes, and so yes, it mirrored the general sentiment of the market participants.
Well, speaking about sentiments for market participants, how much headroom do you see these bonds, I mean these two securities, how much headroom would you say still exists going forward for future issuances?
Well, on all fairness, I would say the headroom still exists. There's still headroom because we're currently in a rising interest rate environment. So yes, generally everybody's interested in wanting to pick the bonds or pick up securities at this point wherein you have interest generally showing that the rates are on the high side. So we'll continually see headrooms as it progresses, as events progresses. Yes.
Talk to us about the liquidity situation at the market, money market. I know it's still, I believe, in a deficit, but what is your outlook for the coming week? Are you expecting an injection of liquidity into the market, or you expect it to persist?
Like you rightly pointed out, yeah, the system has been in repo. That's been consistent. The team that's been consistent the whole of the week. It was down, it was up from 153 billion debit balance as at the beginning of the week to about 13.57 yesterday. But we are positive that the situation will look up with, of course, expectations that we would have FAC inflows coming in next week. We do expect that, yes, the liquidity situation would obviously improve in the coming weeks, and that would automatically translate into rates going down as well.
Let's wrap up with the FX market now. I'm looking at the Naira losing its footing once again against the dollar at the NAFEM market, 9.56. Talk to us about, I mean, your trading band outlook for the Naira going in the new week.
Yes, you were right again about the fact that, yes, the Naira is obviously losing strength against the dollar. This is despite the news that greeted us sometime in the week wherein the CBN did deliver FX in line with its commitment to clear the FX backlogs. But we expect that the Naira would continue to hover around these levels. Remember that all of this is a function of the interplay between the supply and the demand, and if the demands continue to outweigh the supply, expectedly we will continue to see the dollar trading at the same levels where it was during the course of the week, it has been constantly depreciating from about 750 Naira to the dollar at the beginning of the week up until where it closed yesterday at 956.33. So, but we're optimistic that with concerted efforts and with the GDP, like you looking up now, that it has shown the growth rate has increased by 2.54%. Of course, investors' confidence would increase and would see more FX inflows into the economy, which would naturally cause the Naira to strengthen against the dollar.
Kenneth, I must thank you for your time. Thank you for talking to us today, and have a great weekend. Kenneth Onuoha, team member, Assets and Liabilities at UBA.